Imagine a company that's still quite small with a stock price currently around $2, but according to world-famous Wall Street analysts, it's set to rise by 525% in the next 12 months. Knowing the company's name and rushing to invest won't be enough, so you absolutely need to watch this video until the end. I've packed everything into this video for you like a capsule, from what the company does, to its management team, the forecasts from dozens of different analysts, its future plans, and financial situation. So, let's get started. The company's name is TuHURA Biosciences. This is a clinical-stage biotechnology firm working in immuno-oncology, focusing on developing innovative drugs to overcome resistance to cancer immunotherapy. Its main product, AFX 2.0, known as a personalized cancer vaccine, is in Phase 3 clinical trials, being tested alongside Merck's Keytruda drug for advanced or metastatic cases like Merkel cell carcinoma. TuHURA's leadership states that by using IFX 2.0 as a first-line treatment with Keytruda, they aim to help the immune system better recognize and destroy cancer cells. The company adds on its website that, besides the immune agonist IFX 2.0, TuHURA is working on bifunctional antibody-drug conjugates based on its delta receptor technology for the first time. These ADC products are designed to target myeloid-derived suppressor cells that suppress the immune system and tire out T cells in cancer tumors. So, TuHURA's future goals include not just the IFX 2.0 clinical trials, but also developing new drug candidates and researching several acquired molecules. The company was founded in 2023 in Tampa, Florida. Its management team and board include experienced biotechnology experts. For example, TuHURA's CEO, Dr. James Bianco, founded CTI BioPharma in 1991 and served as its CEO for a long time. The CFO, Dan Derborn, brings financial leadership experience from various biotechnology firms. This leadership expertise boosts TuHURA's ability to manage the clinical development of drug candidates and the company's strategy. Now, let's take a quick look at the company's financial metrics. TuHURA is not yet profitable and is still in the research and development phase. The latest financial report for the first quarter of 2025 shows the company has no revenue, with expenses reaching millions of dollars. For instance, in the last quarter, revenue was $0, while the net loss was approximately -$6.66 million USD. These losses are tied to research costs and funds invested in clinical trials. Since the company has no annual revenue, the earnings per share, or EPS, is negative, coming in at around -$0.54 USD. On the other hand, the company's market capitalization on the stock exchange is currently around $100 to $110 million USD. Based on data from Yahoo Finance, the current stock price fluctuates around $2.40, with a market capitalization of approximately $112 million. These low market prices formed after TuHURA went public at the end of 2024. The current stock price is significantly below its all-time high of about $7.93 and has dropped more than 69% over the past year. Its current market position makes it a microcap company, meaning it has a small market capitalization with low stock turnover and relatively high price volatility. Still, the company has taken steps to raise funds from financial markets. In July 2024, TuHURA agreed to bring $5 million worth of its shares to market through a new investor. Currently, the company's funds are mainly directed toward financing clinical trials and development projects. As an additional note, TuHURA's board includes influential figures like the company's vice president and R&D lead, Dr. Bertrand Labourdonnec, a scientist who has conducted numerous studies on cancer classes and developed new drug candidates. This level of experienced leadership provides significant support to the company's research and development efforts. If we look at the company's technical indicators, I can say that the current stock price is $2.40, which is below the 50-day moving average of $2.81 and the 200-day moving average of $3.44. This suggests a short-term downward trend from a technical perspective. It might look weak technically, but such situations are sometimes seen as buying opportunities at the bottom. In other words, the price seems cheap now, and buying before an upward move could lead to high profit potential later. Technical signals give a neutral rating, meaning there's neither a strong sell nor a buy signal. This indicates market uncertainty, but once this uncertainty clears, a sudden and rapid movement could occur. As long-term investors, we need fundamental analysis more than technical analysis, so let's talk about that now and see what famous analysts think of the company's stock. For instance, Wall Street analysts are generally excited about TuHURA's shares, and their forecasts highlight a significant upside potential. According to MarketBeat, the average 12-month price target for TuHURA is around $12.67. That's a rise of about 430% from the current $2.40 level. Similarly, various sources list the 12-month average target price at around $12. Some analysts set the maximum target as high as $15, which would mean a plus 525% increase from the current price. The lowest price forecast is around $9, which is still 3 to 4 times higher than current levels. Broker opinions also emphasize positive and sharp views on the company. For example, Brookline Capital Management set a strong buy rating with a $9 target price for TuHURA in June 2025. Similarly, H.C. Wainwright & Company's analyst Robert Burns maintained a strong buy stance, lowering the target price from $13 to $12. On the other hand, Tony Butler from Rodman & Renshaw announced a buy rating with an $11 target in December 2024. These well-known analysts are optimistic, considering TuHURA's technology and potential. Overall, the current Wall Street consensus based on these analyses falls in the buy and strong buy categories. Similar results are seen on other platforms like TipRanks. For instance, TipRanks lists an average price target of $12, suggesting a plus 365% increase. The Intellectia Analyst portal notes that 3 major Wall Street analysts rate TuHURA positively, with all 3 recommending a buy. These consensus opinions and target price forecasts indicate a massive potential upside from the current market price. So, major analysts are optimistic about TuHURA. Their price forecasts value the company's shares as an asset that could multiply several times. Analysts point to the Phase 3 trial results for IFX 2.0 and new patents in the pipeline as driving the stock's outlook. For example, MarketBeat reports that of the 5 analysts covering the company, 3 rated buy and 2 strong buy. The medium-term target for the stock is set at $12.67, implying the company could see a rise of around 400% in the next 12 months. In other words, analysts are hopeful that the company's lab tests and development work will yield positive results, shaping their price suggestions accordingly. The company is also quite ambitious about its future prospects. TuHURA Biosciences has 3 main plans tied to the future: achieving clinical trial successes, bringing products to market, and developing new technologies. First, the company is working to successfully complete the Phase 3 trial for IFX 2.0. This drug candidate is currently being tested alongside Keytruda for Merkel cell carcinoma, with results being monitored. According to the company's statements, the next step is the Phase 3 trial, set to begin in the second half of 2025. Success in this trial is a critical step toward IFX 2.0's approval and represents a major turning point for the company. Second, TuHURA plans to clinically test a newly acquired VISTA-based molecule. The official statement indicates it aims to start a Phase 2 clinical trial for this molecule in the second half of 2025. This will allow TuHURA to overcome outdated immunological barriers and diversify cancer treatment strategies. The company's scientists say they are testing TBS 2025 with other drugs to explore its broad transformative potential. Third, TuHURA is launching new projects in the ADC field. The company is developing bifunctional ADC molecules targeting the delta opioid receptor, which will have the ability to destroy both cancer tumor cells and the immunosuppressive MDSC cells surrounding them. Such drugs could enhance immunotherapy treatments and improve the effectiveness of current methods. If you're curious about my thoughts, personally, I believe companies at this R&D stage are risky but can also offer high returns. So, investments like this should be made with a long-term perspective, not for quick gains. Seeing such high forecasts can spark the urge to buy, but I think the key here will be whether the company's clinical results succeed. That's definitely a factor I consider when making my own decisions. Since companies at this stage in the medical field can see significant stock surges if their Phase 1, 2, and 3 trials succeed, let me add that the information in this video is not investment advice. I'm just sharing my personal analysis and opinions with you. Everyone should conduct their own research based on their risk profile. I don't buy all the stocks I mention on this channel, but I've shared the stocks I've invested in and the hundreds of % profits I've made with you multiple times, and I'll continue to do so. I'm sure you've noticed by now how much effort I put into making these videos high quality. Unlike many other channels that just churn out videos for the sake of it, I sometimes spend days researching before writing a script. If you don't subscribe to the channel this time, it's very likely we won't cross paths again, and you'll miss this one-time opportunity.